It's January 9, 2014. Current time is 11:20 GMT. Jay Meisler from global-view.com with a daily market update. Before I start with the progression of what charts look like, let's discuss the start of the year trading. So far, it's been one of chop, which is something that I'm not surprised at. I mentioned start of the year whipsaws when we started the year, but the volatility has not been great. If you look at the euro dollar, the whole range has been about 118 pips after Friday's opening gap and sharp move down. There has been a straight line move up in dollar Canada. The outperformer has been sterling, and that sets the stage for today's ECB and Bank of England meeting. As far as the Bank of England goes, it seems the risk would be that it widens its forward guidance so it doesn't get forced into having to raise rates based on some unemployment indicator. Otherwise, no statement. We wait again till next month. The ECB is an interesting one, as I mentioned on GVI Forex, and as I said the last couple of meetings, the disinflation or very low inflation or record core low inflation in the Eurozone, plus an economy that could use stimulus other than Germany, which just does well on its own, really argues for a weaker euro as a way to importing some inflation, at the same time providing stimulus to some of the much needed peripheral countries, even though we're talking about minuscule growth this year. Maybe that's what the ECB is satisfied with, no crisis, tepid growth. But these countries need stimulus, and the only way you're going to get it, I can get on the physical side, you can get it to a weaker currency. It's a no-brainer, except this is the ECB, and the ECB tends to defy logic. Even the Bank of Canada now seems to have quietly joined the pack of talking down their currency in an indirect way. If you look at the ECB, last time I remember an ECB chief talking down his currency was when Trichet uttered those words, the euro levels were brutal, and that led to an immediate sell-off. Draghi has not shown any signs of concern over the level of the euro, but as I said, that is a risk, and maybe that's what's needed for the euro to really tank, because its resiliency remains a head scratcher. It's traded the 136 level each day this week. As I mentioned yesterday, 136.50 to 135.50 is a possible range, and while within it, 136 sets the tone. Yesterday, after the FOMC minutes, we got close to 136.50. We didn't take it out. This is where we stand coming into the ECB meeting. One thing we're guaranteed, we'll have some movement on it, but with forecast of a strong non-farm payroll tomorrow, the dollar downside should be limited, but nothing can be ruled out in this type of market. Sterling briefly broke what I mentioned yesterday as a key level at 164.72. It's back below it now. There's very little on the upside for about another 100 points. So, as I said yesterday, again, 164.80 to the figure is a possible resistance, but sterling strength is most noted on its crosses, even more than versus the dollar. Now, as we go into a simple progression, we'll start with a daily chart. Came right down to this trend line yesterday, which was, I had 134.60. Today it comes in around, sorry, I'll get it close, around 134.65. We touched it for a second day. That's a level you should watch. The 100-day moving average is now within the range. I have to look at what we show it at, but yesterday was 135.40. It's probably a little bit higher than that now. So really that 40, now 65 range, 40.55 range. I would just use 135.50 as an indicator. As I mentioned yesterday, there is potential on the downside to 134. to 133. Should this 135.50, then 135 level give way on the upside, we'd have to get back above this 20-day moving average to negate the overall negative bias. Resistance remains at 135.55 to 70, 136.55 to 75 on top. Now I'll just skip ahead to the 1 hour chart. We've moved above the 100 hour, though it's still sloping down on the upside. There's that 136.55 level. We've already negated the down move from yesterday, and now we go into neutral into this thing. So, really, just look at 135.50 to 136.50. If there are stops that go after, the market may do it. Really depends on what he says. Will he hint of any stimulus? The market will be looking for any hints to make a move on this. I think the market wants to take the euro down, but it's looking for a sign from the ECB that it wants it down. If not, we're going to focus on 136 to set the tone. And as I said, the dollar should have a limited downside into non-farm payroll yet tomorrow. That would only change in the euro if we get above 136.55 to 75. And on the downside, I said 136.50 is the key level. By the way, if anyone hasn't taken part in our survey, you could find the link on the Global View forum. We also have an advocacy site called tradersadvocate.com. I will put a link to that, and I strongly suggest you join that. It's a great cause. It's a great effort we're doing, and our strength is going to come from numbers. So it's www.tradersadvocate.com.